there were 169 new insider trades filed, and it was actually a pretty bullish day, even though the market has not been very bullish. Taking a look at our dashboard here, this is actually now opened up to CEO Watcher Premium subscribers. So if you want to get access to this, we've got lots of cool stuff. You can make sure to go to ceowatcher.com and sign up. But as we can see, a slightly smaller day in terms of the total number of insider trades that were made, but very, very bullish. The most bullish day we've seen, or roughly tied for the most bullish day we've seen in the last month or so. If we look at I guess I don't have a longer time frame on here, but a relatively bullish day here, as you can see, helping creep up our total number of, or our percent of insider trades that are buys over the last month, sitting about the same as October, though we had a few days here that were trickling down a little bit. But overall, insider sentiment still remains quite strong. As you can see, we're starting to work our way back up here again after this little dip. So even with the market being pretty sketchy right now, insiders seem to be still fairly bullish. So as we can see, a handful of bullish sectors today. Obviously this is why the S&P is down so much today. You've got the information technology kind of sector, all of your tech AI stuff is down 1.6%, a pretty disgusting day out of them. And consumer discretionary, actually a pretty rough day too. As you can see, this has kind of been the theme a little bit here recently as we rotate out of the tech sector dominating. As you can see, obviously tech was the best. Both of these are tech related industries right here. As tech has dominated over the last year, these tend to be a little bit weaker over the last week or so, over the last month really, and we're starting to see a slightly more strength in some of the things like real estate and financials, which obviously have been our two most bullish sectors. If we take a look, another thing we like to look at is just kind of the ETFs across the board. Gives us a little bit more of a granular look at what's going on here. As we can see, oil stuff had the best day, it looks like. Travel with a pretty good day, kind of unusual as they haven't had a particularly great year overall, but oil and gas obviously not a great year either, so they're stepping up a little bit here. Bitcoin surprisingly going up when the market is down, and then kind of the first thing that we'll start to notice here, outside of obviously a lot of oil and gas, a lot of gold and silver miners, energy, gold stuff. Up here you can see regional banks up at the top, which just anecdotally we've seen a ton of regional banks, as we've been looking through the insider trades coming in every day. But then obviously financials being the second most bullish sector over the last couple of months, it's not surprising to see that potentially start to have a good run here, even though a terrible year for regional banks, which, as we always say, insiders are obviously very much value investors trying to buy the stock when it is low, and in this case obviously regional banks have had a disaster, so there's been quite a bit of buying. We'll see if that buying actually leads to any improvement in the returns of those companies. So we can see a little more as we look at the largest unscheduled insider purchases coming in by dollar value here. TransDigm at the very top, the president and CEO coming in with a pretty massive buy. Let's go to ceowatcher.com and actually just pull up some of these so that we can see. We'll look at purchases here real quick and we'll sort by transaction value, and we can take a look at what is at the top here. So obviously we're filtering out a lot of this stuff, the IPO stuff being filtered out. Next Decade is obviously one that we've looked at before because of all this insider buying. Obviously the price action has not been very good, so we've been kind of staying away for now, but this will be a very compelling one once that price action turns around and heads in the right direction. But again, these are all 10% owners. We got a couple IPOs here and then 10%, or public offerings here and then 10% owners, so we don't pay attention to any of those. But here our first one that we come across is Michael Lisman at TransDigm. We're taking a look here. It looks like this is just a pretty normal purchase. Let's see, it says these shares were inadvertently omitted from the reporting person's Form 4. I don't actually see, down here. They're just adding down here. So yeah, it looks like a pretty normal purchase. Not a ton of insider purchasing goes on historically at TransDigm, so it's notable to see. However, we do have, it looks like even more recently, the co-COO coming in with a sale, but now you can tell this is obviously a scheduled sale, so we don't ignore scheduled sales necessarily, as 10b5-1 plans and these scheduled sales can still be a signal, just less of a signal than a discretionary sale. So it is kind of interesting to see this one purchase in sort of a sea of red here, a sea of sales. At least as you can see, he is flipping from selling to buying. He hasn't bought in over 4 years. Just over 4 years. He had made 3 sales in a row. His previous purchase went okay. Not very good. His selling track record, not very good. Overall, frankly, just not very good track record out of this guy. And so I don't know how much signal there is here. Anytime you've got an insider making a $2.6 million purchase, that is certainly notable, but just frankly didn't look all that interesting just from his track record there. Next up we would have Progeny, where we got here. Looks like we can take a look here. We've got the CEO buying 79,500 shares. We got this kind of weird, this is one that I saw the other day as well, or maybe I was just looking at this one before. These shares were purchased to offset a tax withholding obligation arising from the settlement of performance stock units from November 13th. I've never really seen having to purchase to offset tax withholding obligations. It's kind of a bizarre situation. It sounds like maybe he's trying to make himself whole from the performance stock, meaning, maybe he received, let's say 160,000, performance units, and then he had to sell 80,000, roughly 79,500 for tax reasons. Now he's buying more to make himself whole. Now, not 100% sure what's going on here, but it certainly lowers the intrigue or the signal from this purchase, as it doesn't necessarily seem quite as much of just an open market insider buy as what we would like to see. What else do we have here? Anything that we've seen before? I mean, these guys at TPVG have been buying the stock quite a bit. As you can see, these are actually the two largest purchases in terms of the percent of the market cap, almost 0.25% of the company each, and they have been buying quite a bit. It's just not been going well for them. Let's see where we're at here. So if we take a look at TPVG, just tells you these are normal purchases here. As you can see, I mean, they were buying a bunch back here. The stock then fell, and now they're starting to buy up some more. I mean, they bought up a non-trivial amount of the company here over the last couple of months. What do we have here? 5 million, 10 million, almost $10 million of a $240 million company. So that is, a few percent there, 2.5%, 3%, something like that, which is certainly notable and would put them probably up somewhere on that top companies list. Let's see if they made it up here. It might have been too long ago, actually, that they won't quite make it up here. It looks like some of these we're past the day where some of these would be included, so maybe that's why they're not quite making the list there. But a pretty obviously all of this buying didn't really help them all that much. So don't really like these BDC companies very much. Not really my cup of tea. These insiders too just don't appear to have a particularly great track record. They do try to buy all of the dips, as you can see. The problem just comes when the stock just continues dipping after they do buy the dip, but the dip doesn't stop. So overall, we have been seeing these guys buy a ton. Just not a very interesting industry in my opinion. And then on top of that, they don't seem to have the best signal either. Looking, what else do we have here? Companies ranked the last 3 months, as you can see. RLMD, which I don't remember what it's called, Relmada Therapeutics or something like that. Let's see here. Yeah, Relmada Therapeutics continues to go on just an absolute tear here, and they have really the only company in the top the companies with the most amount of buying that have done much. As always, insiders, we try to avoid. As you can see, there's actually very few companies that are kind of up here in this top 20 or so that actually have near-term positive momentum. There's only a handful, which this is kind of why we tend to avoid most of these companies. As we said, insiders are typically value investors, so we want to stay away. We that tend to buy too early as well. We don't want to catch the falling knife, so we'd really like to wait to see some of the stocks moving in the right direction so that we're catching the upswing. And as you can see, there's really only a handful up here that are worth even taking a look at a little closer. But going back to just today's insider trades here, what else do we have at the top of the list here? Anything kind of interesting? ABR is a pretty interesting one, as we can see. $469,000 purchase, fourth largest purchase ever out of 13, increasing their holdings only by 1%. Not a massive increase there. But let's go take a look at this stock itself. The CEO and president buying looks like a normal purchase as we look from there. Taking a look here, you can see a bunch of insiders were attempting to buy the stock as well about 6 months ago, and actually, I mean, it worked out pretty well for them. Stock went from under 9 to 12, so 30 something plus % return right there before poor earnings kind of kicking them back down. And now obviously this is going to have just terrible price action, which as always we certainly want to avoid this kind of thing. And as you can see, this is also why we don't just you'll see tons and tons of insiders buying the dip immediately after the stock crashes like this. And this is why we wait for that price action to look a little better, because this is stereotypical knife catching, behavior right here. You buy the dip up here and it just doesn't stop. So we've got quite a ways to go before this one really would be even worth looking a little deeper into. As we take a look, we can quickly look at like the price to book ratio here. Obviously looks quite low over the last, basically the lowest it's been since COVID time. So we'll see if those things can start to turn around. It got way down there during COVID, but a classic value buy here. Again, insiders making a value purchase. Let's go see the quality of the insider here. It looks like we actually had a couple of insiders, the CCO and a director, and this is actually who we were looking at, the CEO here. So these two actually came in just even more recently, just throughout the day today. But we're starting to see some more group buying again. Obviously, it worked well for them back then. Looking at this guy's track record, we can see a bunch of purchases before. He's a pretty consistent buyer, and frankly, he times these purchases quite well. I mean, the only one that's not going so well right now is this one from May, which he's still up 5% from when he bought back here, but we'll see how long that lasts. But he was up 33%, as we mentioned, in the 3 months as the stock was climbing there. But the recent downturn here has hampered them a little bit. However, I think this is a very, very high quality insider purchase. You got an insider, it's the CEO making a relatively large, what was it, 4th out of 13 or something, making a relatively large purchase. Very, very good track record. Other group buying. The stock's on a pretty big dip, trading at a low valuation. This is the exact kind of setup you look for. Now it's just waiting for things to turn around. And if we go back and look at the May dip buys that they did in early May, you'll see it was, where are we at here? So they were buying down here, kind of in this region. But as you'll notice, the way we would want to wait to see how these things play out is wait for these to start to curl up, wait for these to pop up above the moving averages here. So obviously you're gonna miss. If you want to take a stab down here, you can try, but then again, you're just going to get stuck catching falling knives occasionally. So we'd want to wait to see this thing get up above the 50-day convincingly, and really you'd like to see it not only get above the 50-day, but then also have the 50-day starting to creep up in the right direction. So you'd probably end up buying somewhere in here, which is still perfectly fine. You're going to miss the run from like the mid 8s down here, but you're still going to get in the high to mid 9s, and you're still going to be able to ride it from, hopefully $10 up to $12 or something along that for, 20% returns. If we're lucky, well, really, we probably would have sold out down here as it crashes below the 50 days. So, 12, 13% returns. Nothing too crazy, but for a real estate company, especially for a REIT that you're probably collecting a little bit of a dividend on during that time as well, that's a pretty solid outcome at this type of company, and that's kind of how we would want to play that. So we're going to wait for something like this, hopefully, to materialize, where the stock stops going this direction and curls up and crosses above the 20 and the 50-day at least. I mean, obviously, you could try to take a stab earlier around the 20-day, but to me, I tend to wait. I just don't like to be getting yanked in and out of positions, and the 20-day tends to do that to you, so you can wait a little longer for the 50-day. But overall, a very, very compelling setup here, and worth keeping an eye on when that price action does turn around. But you can go to ceowatcher.com, sign up there. It'll get full access to this dashboard with all kinds of pretty cool charts and trades and tables and everything that get updated each day, as well as get access to the website and all kinds of fun stuff. So make sure to do that. Don't forget to like and subscribe, and we'll see you next time.